We have some breaking news out. Tesla has its earnings, just releasing its earnings. Pras Subramanian has that for us. Pras.
Hey there, Shauna. So yeah, the stock bounced around a bit here, up after hours. They reported a slight revenue beat of 16.9 billion versus the 16.88 expected. Big bottom line beat here. Q2 adjusted EPS of 227 a share versus 183 a share. So beat on the top and bottom line here. Free cash flow around $621 million, so less than last quarter, but still positive here. They note that Berlin hit a milestone of 1,000 cars produced in 1 week, so that's a big thing for them in terms of the ramp up of that Berlin Gigafactory. They're also maintaining their 50% CAGR growth rate or compound annual growth rate of 50%, which means they'll probably produce around 1.4 to 1.5 million vehicles in 2022. That's actually a kind of reiterating that forecast. So a lot of very positive note there for investors. They've also converted some of their crypto to fiat. Around 75% of crypto converted to fiat, so they're noting that balance sheet change there. Also, just going to watch, for the call, we're going to watch on more on the ramp up in Giga Berlin, Giga Austin. Want to hear more about the China factory, the Shanghai factory, how that ramp up's going back. Are they back to normal? And also any supply chain issues, any production issues from that point of view. So I'm going to keep looking at this release here, but back over to you, Shauna.
Thanks so much, Pras. Yep, that forecast here in terms of vehicle deliveries, I think, is a big reason why we're seeing shares pop. Like you said, up just about 4% after hours. They still expect to see 50% average annual growth in vehicle deliveries. We have Dan Ives of Wedbush coming on later in the show. That was the key thing that he was focusing on in this report, was the guidance for the second half of the year when it comes to deliveries, when it comes to production. When we also want to talk about some of the, what we could look to in the future here for Tesla, they expect to further increase Shanghai production rate, which obviously is good news here for the company. They did, though, say that they saw a continuation of manufacturing challenges on shutdowns during the latest quarter, something that we were expecting given the Shanghai lockdowns that obviously impacted the company. But Rochelle, looking at this report, it's pretty good here just in terms of what the street was expecting, in line when it comes to revenue, and a beat on adjusted earnings per share, $2.27. The street was looking for $1.83.
And we know that Elon Musk had previously referenced some of these high startup costs for some of these newer manufacturing hubs. So we knew that was going to take issue there. We know that was going to come up. But I think this is much better than the street was expecting. I think this does put Tesla in a very strong position. A lot of people wondering how much Tesla would be impacted by those shutdowns in Shanghai. Obviously, we'll hear more in the guidance that comes along with it. But I think this is a very strong earnings report for Tesla.
Tesla grows 42% on the revenue, but margins decline. Let's bring in our panel. William Houston back with a comment on those Tesla earnings. William, what do you see? What's your headline?
Yeah, so I'm fortunate. I live less than a mile away from the Fremont Tesla factory. And, for us, we can actually see how these trucks are being delivered. And I think Tesla is really good at surprising the market. I think a lot of the estimates, they're kind of softball pitches. I'm shocked by the EP, the earnings per share. But I think, again, the narrative that we had where they were scaling back on some of their staff, that was going to increase net income overall. The China slowdown, I think, is an issue, like you said, and the supply chain is an issue there. We knew they were going to deliver less cars than before. But I am curious to see just like where that earnings per share actually came from. Was it just a shift in the balance sheet, or was it an effect of the release of a small percentage, like 3% of their total staff came down? So that's what I'm going to say we're looking at overall. But I think Tesla, they're really dominating the EV space in terms of percentage of new vehicles that are purchased relative to their peer group.